All right, traders, welcome to today's end of day market video. This is Christian from Tribeca Trade Group. And let's get started about today's price action as well as the weeks. I think we'll kind of come away with conclusions. And as always, I hope that you find this video informative, as well as I'll try to give you a couple things that maybe you weren't thinking about. If you do like the video, please give it a thumbs up, like the video. I appreciate all that. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So first things first, I've fully transitioned to the new office. I was in my prior location for about 4 years, and they actually this is a WeWork, in case if you've ever seen a WeWork, or if you recognize that or you don't recognize that, but basically yeah, so the building that I was in for 4 years, they shut down, and they just decided to consolidate a lot of the buildings. So I'm now over in 85 Broad Street. This used to be the old Goldman Sachs building, I believe, but really nice building, and really like the new surroundings here. So in any event, that's a little bit of my my personal trip this week. Let's get into the price action. All right, so for today, we remember first of all, yesterday was a little bit of a bounce. Remember, we were down and getting a little bit short-term oversold. And I think we were down 5 out of 6 days. Right? Why don't we bring that up first on Bloomberg, and we'll talk a little bit about this price action. So we were due for some type of a bounce day, right? So only one green day this week, 4 out of 5 days. And now if you look at the last 10 days, only 2 up days. Of course, this big one rip day coming in the middle of the week, which kind of threw a lot of people off, when you have that big of a move. But that was up 3%. Yesterday was a decent day. The SPY actually outperformed a touch yesterday versus today, but overall, 8 down days, not very good, right, for the market. So where does that leave us at this point? So let's go over to the charts and talk about a few different observations. Number one, let's start with the week. Why don't we start with the weekly chart first, and then we'll go to the daily. So big picture, right? We are coming to the end of 2022, right? We only have a couple more weeks left, and then we're going to be on to 2023. So number one, we're not going to be relying on this value area much, for that much longer, only a couple more weeks, but it is playing out precisely in terms of telling us what is going on here, is that we're failing to really make the hard turn here, right? So for now, it looks like we've got another lower high in place. Here's your first lower high, second, all right, and then another on the weekly chart. So for now, price is not able to kind of turn the corner. Now, again, we don't know when this is going to change. I think you just have to kind of be ready for that and be patient, right? You're going to hear me say the word patient a few times in this video, as I did, I think, in what was the last night that I did? I think I did a video on Wednesday night as well. So that's really the key right now, and to not get yourself too caught up in this type of price action. And then if we do kind of stay in this range, and I think it's a pretty decent probability at this point, but we're probably going to start 2023 inside the value area, which basically means, kind of a range bound situation. We're going to have our resistance and we're going to have our support. And, and if we started the year, if tomorrow was the start of the new year, I would say, hey, we could have a really sideways year on our hands until we break one of these areas. Another thing before I go into the daily chart, which makes me kind of chuckle a little bit, because I personally see a lot of passionate people. There's a lot of passionate bears out there. There's a lot of passionate bulls. But don't let these people confuse you about the market. We haven't really gone anywhere since all the way back April, May. We've gone nowhere. Net. Now, you could have made money on both of these on a couple of these swings on the weekly chart, but there's no real, I don't think there's really any reason to be super enthusiastic, considering that net price action hasn't got anywhere in the biggest index that's out there. All right. So just to put things in perspective, if you come across some of these people who are very super, or you could even say some of them are perma, right? They're going to try to convince you of all different types of narratives. Really tell them, hey, well, that's interesting, but we haven't gone anywhere in 8 months. It's been back and forth, back and forth. All right. So that kind of it's a little bit of curb your enthusiasm. I tweeted that out just a minute ago. It is what it is. All right, on the daily, again, we like to always start at once the week is complete with the weekly chart, because that gives you some big perspective, or bigger perspective, I should say. On the daily chart, yes, we did get rejected now at the 200-day moving average. We have taken this out. We're on the bottom of this range, so we're kind of hanging on by a thread. Of course, next week we've got some big events. Today was PPI, but next week will be more important with that CPI report that's on Tuesday. And then we've got the Fed meeting, plus the press conference, which always provides a whippy move. And, we'll see. I don't have a crystal ball for next week. I wouldn't get wrapped up in this pivot nonsense. I think, there's two things that I was kind of talking about at the end of the day, right? People seem to have this idea that the Fed is going to start cutting rates. You can't, first of all, the Fed is still increasing interest rates. So I would be more concerned with, when is the Fed going to stop increasing interest rates, right? That should be the first thing. What we've heard from Powell so far is that once they stop raising interest rates, they want to keep rates there for a while. That's not what the market is pricing in with this curve, but let's see if we get some new information from Powell. Again, this is subject to change, but right now 50 basis points is what the market is pricing in, and then almost another 1% in the meeting thereafter, right? Right now we're at 3.8% for short-term rates. This is the Fed fund rate. 3.8%, right? We're looking at another 50, and then, it's basically telling us that we're going to top out somewhere around March, close to 5, just a little bit under 5%. So again, that could change, but that's what the market is telling us right now in terms of that. And, data will probably dictate some of those moves. All right. So that's what we've got in store for next week. So we're kind of sitting back in here. If you watch my video on Wednesday, I was talking about how we're kind of right in the middle of the value area for the month. And, it could be that we could either, come back up, right, or come back to, fall down to 38.22. I think I talked about this on Wednesday. Of course, the very next day, the market rallied, just to make me look like I'm wrong. But really what I want traders to be is prepared. This is about, it's close to a 3%. I think it's about 2.7% move to the downside, right? And I think that would kind of regroup things a little bit if that were to happen. Okay, so that's one scenario. And then, of course, the 200-day moving averages to the upside. Another thing to notice here is that, look at these two moving averages, right? This is the 5 and this is the 20. This is important to me because I've been more of a shorter term trader, not a day trader, but short-term swing trades mostly. And I like to know what the price action is telling me with the short-term trend. And we're currently below these two moving averages. All right. So that kind of tells you for now that the trend is starting to move back to the downside. Okay. And the next support I see is the 50 and the bottom of value. All right, so that kind of wraps things up here a little bit with the S&P chart. I also, I look at IWM, the small caps, to kind of tell us, give us a sense of, what the small what kind of a little bit more of an aggressive area of the market is doing, and that does not paint a very good picture. All right, so that's a move that is already down to the 50-day moving average, and also broke the value area. So that does not give me a warm and fuzzy feeling for the overall market. I like to see, I believe that sometimes, not all the times, but I believe that small caps sometimes can lead the move. So the fact that they're not acting very well here makes me, again, a bit more cautious. One other thing too, I keep hearing traders talking about the Santa Claus rally. Again, remember, make sure that you know when the Santa Claus rally is, right? If you were looking for the Santa Claus rally this week, you're really doing it wrong, because that's not when the so-called Santa Claus rally is. It is really supposed to be the last week of the year. There is some debate, and you can Google this. Some people think it starts a week before that. Okay, that may be it, but it's definitely not this week. So if you were thinking like you were going to get a Santa Claus rally, well, that's wrong on multiple fronts, because that's not when that time frame is. Okay, and again, I think Twitter confuses people with this nonsense, but it is what it is. I thought it was also important to kind of look at what happened last year, right? There was a Santa Claus rally. Again, when is the so-called Santa Claus rally supposed to happen? The last week of the year, right? And maybe sometimes a little bit before that. Again, I'm not an expert on such things. I just kind of take the actual definitions and try to understand what they mean, right? Last year, this was the quadruple witching week. So not only, of course, do we have the CPI and the Fed, but we also have quadruple witching. Next Friday will probably be one of the most busiest days of the year in terms of volume, if not the busiest, because it's not only just monthly option expiration, but all of the major indices rebalance. The S&P and the NASDAQ, and even like those things like the equally weighted sector ETFs, your XRT, your XHB, your XBI, right? Those equally weighted indices, they all rebalance back to their benchmark weight. This happens every, once a quarter, and it's December, March, June. September, December, March, and June. All right. I know it's late in the day. But note, this is what happened the last week. So if you're thinking that you're going to say, okay, I'm just going to, not do much, and I'm going to be long for the Santa Claus rally, you might be disappointed, because we actually corrected pretty decently that week last year. Again, I'm not saying that this happens. I'm just telling you what happened last year, right? That there was a pretty decent move down that week, right? And then we did actually ramp into the end of the year, right? Or until around that last week. And then we rallied. And then, of course, what happened at the beginning of January. So again, it's important to have this perspective of what actually, happened last year and what could happen this time around. All right. It wasn't a straight up move in December. All right. A couple other things. I mentioned I would review the week. Right. Pretty much everything on that top line is red, guys. SPY was down 3.4%. IWM, as we just talked about, underperformed, down 5%. The Qs were kind of, right in line with the SPY performance. International areas also underperformed. International areas also were in the red, and then bonds were down for the week. Not a huge amount, but they did finish lower, and a small move out of the dollar for the week to the upside, up 0.5%. Growth drastically underperformed. Well, I shouldn't say drastically, but it underperformed value. But both were decently down for the week. Performance for the week, the Chinese internet names did very well. They were up 4%. We saw a couple days where there was a nice gap up. And then you had some defensive areas of the market they outperformed a bit. Utilities were almost flat for the week. The healthcare was down 1.3%, right? And a couple other areas in there, steel, not that bad, down 2.4%. Still, it's down decently. If you look on the right side, there was some areas that really got smoked. Pot for one, joke there, down 18% for the week. Again, I never really get excited when these things rally a bit, because for the last 2 years, every time they've rallied, they've come right back down. Oil services, and as well as XOP, equally weighted, another index that will rebalance on Friday. Those were both down about 12% for the week. So really the energy, which I believe got overcrowded a bit, really underperformed this week. Also, metals and mining down 6%. Solar was down 6%. And the banks, of course, which we talked about earlier in this week, they were down 6% as well. So pretty nasty performance overall. Here's your international. If you were all in Egyptian equities, congratulations. They were up 9% this week. All right, another joke. That's the last one, I promise. So where does that leave us? A couple other things that I'll be watching. Okay, so we talked a lot about negative things that happened this week, and again, it makes me feel cautious when I talk about the S&P not being able to get into the value area for the year. Small caps look weak. The price of the S&P is below those short-term moving averages. Here's something that doesn't look horrible. I wouldn't say good, because they did not close, and they're right at the bottom of value as well, right? But this might be interesting too. So just like I said, small caps, I find that small caps sometimes lead the market. I think semis are also an interesting area of the market in their own respect. I would view this bullish if they can get above 224 for next week, 224.36 specifically, but not there yet, right? So I mentioned that I would say the word patient a few times. That's the whole key. And we've talked about this throughout the year that, try not to get worn out. Bear markets will wear you out. So your job right now is to not get worn out in this market, right? And to stay ready for when things actually change. Remember, even if the Fed, just putting, and that's what trying to do in this video, is just give you some perspective. Even if the Fed does slow down with the interest rate hikes, right, it is still a big level of interest rates, right? So until they really stop raising interest rates, it's going to be a bit of an uphill battle. But eventually it will end, right? And the bear market will end. Every bear market that we've had since the beginning of the US stock market has ended, right? So you just have to be fresh and be ready for that whenever that does happen. I don't have a date for you, but I know that the bear market will eventually end, all right? And so staying fresh and ready to go is important, and that's the key, and not to get too scraped up in the meantime. And that's that's the whole key. There was something else I was going to say, but I forget what it is. So I think next week will be an action-packed week. There will be something for everyone. I think that's what's so interesting about this market right now, is you've got a ton of different viewpoints, and you've got a ton of events that things can kind of move in one particular direction or another. All right, guys, so that's it for today's video. Have a great night, have a great weekend, and I'll see you on Monday.